Closing bell ringing on Wall Street. The Dow is up sharply. Time for... Ah, yes, look at that. That's a nice, strong gavel to bring trading to a close on Tuesday, the 7th of August. If you can't beat them, go private. Elon Musk considers taking Tesla off the market. The Federal Reserve isn't the only central bank dealing with President Trump's tweets. China, Turkey and Iran are all under pressure, thanks to the tweeter-in-chief. And Arsenal FC is a new man in charge. The fans and the trust aren't best pleased, thinking he hasn't got the club's interest at heart. I'm Richard Quest, live in the world's financial capital, New York City. I mean business. Beautiful day. Good evening. Tonight, Elon Musk wants to cut out the noise of the market. Tesla's chief executive says he wants to take the company private. The decision will be put to shareholders if he decides to go ahead with it. Elon Musk announced his intentions in a tweet that shocked investors. Now, the tweet said he was thinking of taking it private at a price of $420 a share, and immediately the shares spiked. The market then halted them, as you'll probably do when there's market news and disorderly markets, and trading resumed just about 15 minutes ago, and since it has risen by some 11%. You now see Tesla up 36.41. The price that Musk is offering is, or will be offering, or could be offering, or may be offering, is $420 a share. So there's a significant 20-odd% premium over the closing price tonight. In a blog tonight, Musk has written, I fundamentally believe that we are at our best when everyone is focused on executing, when we can remain focused on our long-term mission, and when there are not perverse incentives for people to try to harm what we're all trying to achieve. Paul Monica and Peter Valdez-Tapina are here to help us make sense of it all. Peter, of course, is automobiles. Paul is our guru on markets and economic matters. So, first of all, we'll go backwards and forwards, if we may. Gentlemen, firstly, Paul and Monica, how much of a surprise was this?
This was a very big surprise. It came out of the blue, woke up a lot of people on a sleepy August summer Tuesday. Elon Musk pretty much saying, hey, you know what? I'm going to take my little electric car company home, maybe go private, because I'm tired of all the scrutiny that I get from being a Wall Street publicly traded stock. But I don't think anyone saw this coming, despite the increasingly bizarre behavior that Musk has exhibited in recent months.
How good or strong or robust is Tesla, despite all the criticisms?
Despite the criticism, they've come back financially. Some have said they're not profitable company, they're not making money, but they're starting to really ramp up production of the Model 3, which I spoke to some analysts and is a profitable-looking product. They've got production rolling along. He makes the point, it would be nice to maybe be doing this without so much scrutiny. Maybe it would have been nice to see them ramp up Model 3 production in a more orderly fashion than they did, building a production line in the parking lot under a tent to try to meet their self-imposed goals. So there may be something to that if they could have ramped that up in a more orderly fashion without this.
Did Musk break any laws, any SEC laws, do we think, is the better opinion, by by writing this tweet? I mean, obviously this blog and the statement is a much fuller explanation, but just to tweet in such a fashion.
It does not appear as if he has violated any of the SEC's rules, Regulation FD, for fair disclosure. Apparently, what you need to do is you as a company have to let your shareholders know that you might give out information through channels like Twitter, Facebook. This is something that came to light a few years ago when Reed Hastings, the CEO of Netflix, put out a Facebook post congratulating one of his executives about the subscriber growth. And people were like, wait, why didn't you put that out in a press release?
The cars themselves, people love them. Those who, well, many of the people, I would say,
yes,
they love them. The company comes up for great criticism, but Musk is a visionary. And maybe taking the company private is the right way forward.
I think it might be. As I said, it might be good to make some of these changes without that kind of scrutiny, have the time to concentrate on quality, which is my one concern still with the Model 3. I'm not sure I want to be one of the customers that bought a car when the company was going through this rapid ramp up in production. It might be better for them. The cars themselves, the new performance version of the Model 3 has had fantastic reviews. I've driven the regular version. I really liked it. I think the user interface is going to be off-putting to some people. But as a fundamental vehicle, as a car, the performance is good, the ride is good. If they can keep the quality, which may be improved by this, it'll be great.
There are two other areas. He says the quarterly earnings cycle puts enormous pressure on Tesla to make decisions that may be right for a given quarter, but not the long term. That is the oldest argument in the book against the quarterly earnings report, isn't it?
It is, but if you don't like it, then don't go public, which is what he's
But is it damaging? Is it damaging to have companies under such ridiculously short-term scrutiny? When the Chinese, for example, are building the new Silk Road that may take them 55 years and several $100 billion.
It is an unfortunate byproduct of Wall Street and the way that American companies and other companies around the world tend to trade in public markets. But to be fair, and this is why I have difficulty having sympathy for Elon Musk in this particular regard, there are lots of companies that have faced this pressure before, and they do just fine being able to navigate the short-term pressure of Wall Street, institutional investors, and sell-side analysts, while also doing what's good for the long term. You look at a company like Apple, they did it with Steve Jobs, they're still doing it with Tim Cook. Google, Alphabet, they have done it. Larry Page, a founder of the company.
Arguably GE is doing it, even in front of our eyes.
They are now doing it, yes.
Short sellers.
Facebook as well, with Mark Zuckerberg.
The most shorted stock in history of the stock market. I don't know whether that's true or not, but I suspect it is. So Musk has said it. Shorted stock in the history of the stock market. Being public means there are a large number of people who have the incentive to attack the company. Now, short selling, as Carl Icahn has done, as he has with Cigna at the moment, being involved, can expose weaknesses and inefficiencies and bad value in companies.
Yeah, and it would seem like, as Paul just said, other companies are exposed to this all the time. And the large number of short sellers on Tesla does indicate that there are a lot of people who feel like this stock may be a very good company, just not at the value that it currently has. And there's a discussion that goes on that these people are a part of.
I would go long right now on the maker of the world's smallest violin for Elon Musk to play, and he can wallow in self-pity about how he is the most shorted stock. I mean, we've heard this argument before. He needs to give it up. Yes, it is true that a lot of short sellers have targeted Tesla, but they have done so, I think, with good reason. It's a company that hasn't made money traditionally, typically, and it's a company...
Short-termism!
But this company that's currently valued at more than General Motors. I mean, and look, this company is just not... It's just not... I don't see General Motors. Tesla's great.
You can't be like, trust me, in 2100, we're going to be huge. But don't bash our stock right now because 2100 is a long time away.
Gentlemen, thank you. Elon Musk isn't the first CEO to take his company private. Dell went private, and then it went public again. Burger King went public twice. Boots later became part of Walgreens. Heinz and Hilton both delisted from the New York Stock Exchange, preferring to be out of the gaze of the public. Facebook denies it's actively asking big banks for their customers' data. The Wall Street Journal has reported that the social network wanted to get account balances and credit card activity from major US banks. The shares were down, snapping a three-day winning streak. They had been up at the beginning, but they went down quite sharply. Samuel Berg is in London. Samuel, firstly, clarify, does Facebook want these bank details or not?
Yes, they want them, but not in the somewhat nefarious way that the Wall Street Journal was reporting. I think the facts of the Wall Street Journal report are correct, but Facebook says, no, we're not going to do what you're trying to imply what you're saying we were going to do with them. I'll just put up a statement from Facebook. They're saying, yes, we want to create a space where people can do online banking on Facebook Messenger, but at the end of the day, like many online companies with commerce businesses, we partner with banks and credit card companies to offer services like customer chat or account management. all the analysts I spoke to today, Richard, said the same thing. This is a positive move for Facebook. You want them to be competing with Venmo, which in the United States, everybody uses to send money. That's what they're trying to do here. It's just this microscope that they're under now after fake news and Cambridge Analytica. Every last thing has people suspicious of Facebook.
All right, and the question of Tesla. Once again, Samuel, that we've just been talking about the short-termism of the market, the short selling. Tesla, of course, is arguably as much a tech company as a motor car company, certainly when you take into account SpaceX.
But listen, here's the thing. I think Paul was exactly right when he's saying that there are lots of companies. I'll just use Facebook since this is the story that we're talking about. Mark Zuckerberg, to his credit, has figured out how to listen to the market when he needs to. Think about how much Facebook stock went down when they weren't good on mobile. They listened to the market there. They took their time. And then sometimes he doesn't listen to the market. Right now, there was a huge sell-off when they said we're going to spend more on privacy. And Mark Zuckerberg said, I don't care what the market is saying. I know what's best for my product long-term. I'm going to spend on this one. So he has that balance of knowing when to listen to the market and listen to them long term. And it feels like Elon Musk just doesn't have that backbone at the moment.
Samuel Berg, thank you. Now, what we see with Facebook and indeed with Elon Musk and others is tapping into the app economy. And we're waiting for Snap results, which is another millennial favorite, which will report within this hour. What's undeniable is the change that this group is bringing to business. Wherever we look, from transportation to banking, the trend is changing towards the app economy. And it is accelerating. As we'll talk several times over this program, as you've already heard, millennials are outnumbering baby boomers. Let's start with investing. There is a range of apps that have now been created. There's Robinhood with zero commission trading for stocks. And now you can also have cryptocurrency trading as well. I think this is all going to end badly one day. Then you've got Stash, which is lowering financial barriers, where you can buy fractional shares for $5. Think about this. You can, you take a Berkshire Hathaway or even an Amazon at $1,800 a share, buy a little bit of it. And then Betterment. Now, Betterment is an interesting little number because it builds a portfolio based on your goals and, unlike a commission, charges an annual fee of 0.25%, I assume, of assets under management. Arguably, if you don't make more, they make more when you make more. Those apps are forcing the changes at traditional retail investment companies with new offerings with low fee or no fees. In the C-suite, one of the people responsible, John Stein, is with me, the CEO of Betterment. Good to see you, sir.
Thanks for having me. Great to be here.
So, Betterment is joining a very crowded field of investment advisors, all of whom claim to be able to do the best they can for you. And frankly, in my opinion, most of whom shouldn't be allowed through the front door. Why are you different?
I would say we've been leading the way for a new generation. We started the first online financial advisor. And that means we take all the things that a great financial advisor ought to be doing for you, and we make them smarter, faster, cheaper, better, and accessible to everyone through technology.
All right, so that sounds wonderful, but at the end of the day, what's the average portfolio size on Betterment?
The average customer today manages about $40,000 on Betterment. We have 400,000 customers and about $15 billion under management.
Right, and the amount of, and the way, the transaction fee, it doesn't exist, of course, per transaction.
There's never a transaction fee. Our fees are totally transparent and they're low. They're a quarter of what a traditional financial advisor might charge. And that's because we use technology to automate a lot of great services for you, like tax loss harvesting, asset allocation, financial planning, and it's goal-based, as you said.
You see, I question whether or not technology can replace the, I mean, I'm not trying to hark back to the 1950s.
I don't believe that there will be a full replacement. Nobody talks about replacement.
Your broker.
Just like if you think about, will technology replace teachers or doctors? I don't believe so. But can it augment them? And in some places, can you use it instead? Absolutely. So we work with thousands of financial advisors who use the Betterment platform to better serve their clients with the best client-facing technology.
Recommendations?
we provide diversified portfolios that are appropriate for each of our clients' goals. So every client gets the right goals for them, retirement or college savings or down payment on a house, what have you. And then we build a portfolio that's appropriate for those goals.
How do millennials look at money differently than, say, an old fogey like me?
So we have lots of millennials in our customer base, though we have people who are just starting out, like millennials, and people who have millions of dollars on the platform, too. The millennials are coming to us and saying they want to be more purpose-driven in their investing. We hear that a lot. So they find the socially responsible portfolio that we created really appealing, where you get to have a globally diversified but still socially good investment.
What's the average rate of return on your portfolios?
So it depends. It's different for every individual.
Yeah.
And, you know, like there was a really interesting Barron's study that just came out last month, and they looked at the entire field of robo-advisors, and they rated us on performance, but that was only 30% of the score. We won on across all the marks. We are actually number 2 overall behind one of the other 12 for if you included performance. But if you took out performance, which is only a 2-year historic track record, we were number 1. And we think that 2-year performance is like not the right way to evaluate an investment advisor.
Good to see you, sir.
Good to see you. Thank you.
Avis once called a slogan, "We try harder." The company admits it's still trying. After the break, how traditional car rental companies are moving with the times.